So good afternoon and thank you for joining us today for the Locality Planning Energy Investor Webinar. My name is Jane Morgan and today we are joined by Non-Executive Chairman Justin Pettit and Managing Director and CEO Damien Glanville. We will be providing a company update and expanding on the recently lodged announcement regarding the renewable energy Biohub. To ask a question throughout the presentation, please use the Q&A function at the bottom of your screen. Justin, I'll now hand over to you.
Thank you, Jane, and hello, everyone. So just for anyone who doesn't know LPE, we're an energy retailer and we primarily service strata communities. We got Damien and I started the company back in 2012, got our authority in 2014 and took our first building on board and listed at the beginning of 2016. We've got 46,000 customers in total, and I'll go into a little bit more detail about those in a minute, but we are a fast-growing electricity retailer. We not only supply strata communities and embedded networks, but we also supply a lot of products, generation products behind the meter, solar and batteries and hot water systems. Now we're also getting into large-scale renewable, which is like a larger embedded network, which I'll talk about, and the Biohub in Bundaberg. It's a bit of a snapshot of the company, 46,000 customers, 26,000 of those are embedded network or contracted customers, with the other 20,000 direct market. We've got close to 100% retention rate with our embedded network customers. We've been growing that side of the business quite well with, at the moment, a lot of developers and takeovers. So these are existing embedded networks that are coming across to us, buildings and their body corporates looking for a better service and looking for the better securities and dealing with an energy retailer. Every year, we've been managing to grow our revenues quite strong in our customer base. We're getting very close to that operational leverage point, where we hope in the next couple of years that we're at that point where we've grown our revenues and customers high enough that we've got the operating cost base in place to start turning profitable. And we think that'll be around 60,000 customers or just over $100 million in revenue. We're forecasting to do over 70 million in revenue this financial year. And as everyone can see from our quarterlies, we're well and truly on track to achieve that. From some highlights from last financial year, 55 million in revenue. You can see our costs are not rising, they're going up marginally, but we've got them under control now, and we'll start to see that leverage with our additional revenues and customer base. Again, I'll talk about the Biohub and the cryptocurrency mining option that we have coming up here shortly. But here are our growth opportunities over the next couple of years. Obviously, our embedded networks, virtual power plants is something we've spoken a lot about in our quarterlies and our latest announcement. We'll look to launch that next month. That's very exciting. We'll talk about that in a minute. We continue with our retail electricity, but also renewables and crypto mining, which we'll get into in a bit here. Virtual power plants, there's been a lot in the news about different retailers getting into this space. Essentially, it's putting solar and battery in behind the meter, whether it's a business or a home or a building, and utilizing that unused portion of the battery to feed back into the wholesale market when prices spike. So we've got algorithms that will bring a lot of batteries together and we'll discharge them all at the one time. We're not talking a lot, we're talking a couple of kilowatts at a time, but the algorithms are smart enough to know if you're using the battery, if your habits are that you will use that battery. So we're only ever discharging the amount of energy that's not being used from that battery. We'll also share the revenue generated from the VPP with the customer on a credit on their bill, their monthly bill. So financing of our solar and battery will be done off balance sheet, and we'll be able to announce the company that we'll be partnering with to do that here shortly. But essentially, we, from a company perspective, we pick up an electricity customer who are contracted. We also pick up a margin on the VPP side, which we share with the customer. And we're also installing the solar and battery system, picking up a margin there. So rather than just an electricity customer, there's several points of contact and several margins. From a customer perspective, they're able to cash flow solar and battery and really insure themselves against rising energy prices in the future by locking in that cost of energy and getting the majority of their usage behind the meter. The big announcement that we've made lately is our involvement in a Biohub, so getting into renewable energy in Bundaberg, Queensland. This will be the first project of many that we've been looking at to get involved in. And the Biohub is the best way for me to describe it is a large embedded network. So where we've been very successful in the past with going into buildings, converting them into embedded networks, putting up the capital costs for those embedded networks, recovering that capital over time, generating a saving for the customer and bringing on contracted customers. The Biohub's no different. We'll put $5 million of capital works funds into the project. There are 5 tenants in the Biohub. We will manage the billing of the electricity both behind the meter and in front of the meter, and we'll also earn a return on that $5 million. I suppose the big difference between our buildings and the Biohub is we'll see that $5 million in capital works funds back within 18 months. So we're putting out capital works for our embedded network, we're billing behind the meter, and we're generating a return from that $5 million, and we'll see that back at the end of the term. The big thing with the Biohub is one of the tenants, all the tenants have signed up. So they're either on 5 + 5 + 5 or 10 + 10 + 10 year contracts. But the biggest consumer will be a crypto miner called Stack Mining. These guys, as everyone knows, crypto miners use a lot of energy. It's the major part of their OPEX. And these guys have a mandate, Stack Mining, to use 100% renewable electricity. So they will be supplied electricity behind the meter from the Biohub, but any additional green energy will then be imported in from the grid. They have other projects that they're working on in the Bundaberg area, which will be able to offset and feed back into the Biohub, but that's another 1 or 2 years away. And what we've done is we've also put an option together should the crypto miner Stack Mining get up and running and be as successful as we think they're going to be and as they think they're going to be, we'll get to review 3 months of cash flow. And should those cash flows meet their forecasts, then we can decide if we want to exercise the option and convert 3 million of our 5 million capital works funds into a 50% interest in Stack Mining. And from there, we'll enjoy the 50% of the proceeds generated from Stack. So I should be very clear that the investment we're making is in the Biohub. The return we're getting is from the Biohub, and Stack Mining is an option that we could exercise later in the year, probably middle of the year. Stack Mining are looking to be up and running in July, so we'll get July, August, and September to review the cash flow. They'll have over 100 miners up and running, so we can see what that cash flow looks like before exercising the option. So if we choose not to exercise the option, we continue to get our return from the Biohub and our money back. But if we do, then that will be quite an interesting ride because the cash flows are quite strong and can be quite strong, and they would augment our existing retailer cash flows quite well. So again, we're just building a vertical within our business that not only uses a lot of electricity, but can generate a lot of underlying cash for the company and its shareholders. We recently also announced a capital raise, and that was done, we raised $7.5 million. and the appetite, or that was very heavily oversubscribed. We were looking originally for 6 million. We had double that in appetite or bids, and we ended up scaling back to $7.5 million. So it's been really great to have that support from new and existing shareholders. This slide here, which we always include, gives a bit of an idea of our EV currently without the Biohub and the crypto option, what the company looks like with our 46,000 customers and netting out our debt from BlackRock. So just gives an idea of where we're trading at 10 cents and where we should be trading. There's a lot of built up value within the company that hasn't been realized in the market yet, but we're expecting that to change. This is the snapshot of the company, the capital structure post-issue. Myself and Damien still holding 1 and 2 shareholding, holding a significant interest in the company. Subject to shareholder approval, I'll be participating in the capital raise, and we'll have a notice of meeting out for that here shortly. Board of directors, again, the company's run by Damien, so there's a lot of knowledge within him and within the company, not only to continue to execute on our embedded networks and strata communities and servicing strata communities, but to build our products that we're rolling out, including our VPP. So it's going to be a very exciting year for the company. It's a big project that we're taking on in the Biohub, but I should stress it's very well supported by the equity raise that's come into the company. So we're really looking forward to keeping shareholders up to date moving forward. So I think that's all I've got on the presentation. I've got a few questions here, which I might try and address. Damien, I don't know if you want to talk about the hike in wholesale energy prices in Queensland. What caused that, and how that could affect our revenues over the next 12 months?
Yeah, so effectively over that January period, we had Kogan Creek, which is another large generator in Queensland, went offline for maybe 21 days. When it come online the last few days, I think, and effectively it was a supply and demand issue. So when we had one of our biggest heatwave days come through at the same time when generation was offline, so we had pressures on supply and demand. So therefore, the wholesale market reacted. So the spot price was in the 15,000 type margins. We have our trading strategy is basically very much about margin protection. So we were long on our hedging strategy. So we had caps and swaps in place to protect our margin. So ultimately we had to pay out some cash for credit support as under the AEMO guidelines, but it hasn't affected our margins. Future energy prices as a result will increase. So we'll see, later on in the year, we'll see energy prices across the board increase based on what the futures hold. We'll put up our prices accordingly to maintain our margins.
And that will be what affects revenues increasing.
Yeah, it'll have an effect to our gross revenues.
Yeah. Okay, thanks for that. The next question I can handle: how creditworthy is Stack Mining, and how will you manage your exposure to them? That's a good question, and I'm glad you reminded me. The principals of Stack are very experienced in their fields. They've been running algorithms in the crypto mining over the last year, and now it's time for them to go into the real life. But LPE won't be exposed to them. We have a second mortgage over the Biohub project, so our $5 million is actually secured over the entire project. So we're a second mortgage behind Centuria Bass, who have committed to loan the construction funds to Smart Capital. So we're secured through the project. We get to see Stack Mining up and running and cash flowing before we make any decision to exercise our option. So we feel we're getting the best of a lot of worlds there. So we're getting our investments in the Biohub, we're getting a return from the Biohub, but we also have that exposure and upside in Stack Mining. So we think it's pretty well secured our exposure. Can we please go into detail on the BlackRock refinance? Yes, that's underway. As you read in the last announcement, BlackRock stepped in for another $4 million to cover our AEMO credit support that Damien just went through. So they've been very supportive of the company, continue to be supportive, but we are currently in the market talking to several parties about refinancing the BlackRock debt, but also restructuring our debt so that the AEMO credit support is a lot better structured moving forward. So BlackRock, the term with them comes up in November. We're expecting to have that sorted well before that date. When do we think the company will turn operationally cash flow positive? Well, subject to us not investing as much into growth, we think financial year 2023, so next financial year, will be a time when you can expect to see profits and cash flow positivity once we reach that 60,000 customers or over 100 million in revenue. So that's when we estimate from our investments when we will reach that consistent profitability. And I think that's all the questions we've got today. So Jane, that's I think a couple of the same questions around BlackRock. So I think I've answered that. So yeah, thank you everyone for your time. And Jane, hand it back to you.
Thank you. Thank you, Damien and Justin. And thank you all for joining us today for the Locality Planning Energy Investor Webinar. Should we have missed any questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But we look forward to updating the market in the coming weeks. Thanks again.